Well, greetings, everybody, and welcome to this important and extremely timely webinar. On behalf of Marine Money, I'd like to thank the High Tide Foundation, whose commitment to combating climate change is sponsoring what will be a year-long series of industry and transaction supportive webinars, inspired by the often remarkable and always encouraging work that our industry, its principals, professionals, and advisors are undertaking to combat the threat of climate change. Our hope, along with High Tide, is to bring together and support the community of marine decarbonization stakeholders. Our goal to provide a real-time forum for the exchange of new ideas, fresh data, and proven results. We open the monthly series with a look at the second-year results of the Poseidon Principles, one of our industry's most concrete, collaborative, and growing efforts to support those who have made a commitment through their commercial, technical, and operational efforts to bring change to the industry. All of us at Marine Money are enormously respectful and appreciative of those who are participating with us today for their personal, corporate, and institutional leadership in this groundbreaking effort. We understand that there are many complex elements of our industry's global evolution in the battle against climate change, and appreciate the opportunities like today to examine critical individual and collective initiatives central and inspiring to our industry's meeting its goals. It's an awful lot to cover, but we do have a chat feature on the side of GoToWebinar where you can place your questions, and Johannah will be able to curate those. I'd like to personally thank our participants, Johannah Christensen, Michael Parker, Paul Taylor, Bud Darr, Arlie Sterling, for the time and thought given to not only today, but more importantly, along with their colleagues around the globe, to the subject issue. And now it is a privilege to turn the program over to Johannah Christensen, CEO of the Global Maritime Forum, birthplace of the Poseidon Principles, and whose full body of work the High Tide Foundation is also pleased to support to lead the discussions. Johannah, over to you with respect and appreciation. Thank you. Good luck, everybody.
Thank you so much, Jim. And thank you so much for, as always, your incredibly kind words and words of support. So maybe I should just kick us off with just a few very basic facts before I get the discussion started. So the Poseidon Principles were founded in June 2019 at a Marine Money event, or launched at a Marine Money event with 11 signatory banks. We currently have 27 signatories representing more than half of global ship finance. The second annual disclosure report of the Poseidon Principles was published at the end of 2021, so just a month and a half ago, approximately. There were 23 signatories reporting in 2021, and that's 8 more than reported the previous year, which was the first annual disclosure report. 11 out of the 23 signatories aligned with the IMO's decarbonization target, and that's up from 20% in 2020. But as we'll get into much more granular detail about all of that in a short moment. But I just also wanted to mention that the Poseidon Principles, I think one of the really exciting elements that we've seen is that they were able to lay the tracks for a range of other initiatives in shipping, the Sea Cargo Charter and the Poseidon Principles for Marine Insurance that were more recently launched. And of course, similar frameworks are also in development in other key sectors, something that Michael or Paul might want to talk about, as some of their institutions are involved in those efforts as well. But before we get into all the nitty-gritty, I wonder, Michael, as chair of the Poseidon Principles Association and the key driving force in the development of the principles and continued development of the principles, I wonder whether you want to just kick us off by giving your sort of brief overview of the results of last year's reporting and where the Poseidon Principles are today.
Thank you, John. Let me go back a little bit to 2017. We had just established the Global Maritime Forum. You asked to meet with the Rocky Mountain Institute and the World Bank to talk about them wanting to tell banks which ships should or shouldn't finance. And we've come a long way since then. I think the key thing about it all, though, and we must remember this, is this has been a collaborative effort with the industry, with our clients, and with the advice of experts. So I look at Arlie on my screen, I think of UMass, Tristan Smith, I think of Register in particular. You know, we benefited from the expertise on the technical aspects of this, wanting to ensure that what we were doing was very transparent. The ability of what we're doing is aligning with an ambition of a global regulator. And it's very important. Shipping benefits from having a global regulator, and we're making full use of that. However, as we have said in the steering committee of the Poseidon Principles, we're not bound by the IMO, we're guided by the IMO. And in fact, in the next few weeks, we would hope to move our ambition to a zero ambition, even if it's going to take the IMO somewhat longer to do the same. And the reason for that, I think, is a lot has changed since we launched in the external world. We were the first industry where finance moved to create a framework for measuring emissions, because the IMO gave us the trajectory, gave us their ambition to do that. But since then, in particular leading up to COP26, we've seen many more initiatives, and particularly for the banks that are signatories. The Net Zero Banking Alliance and the Glasgow Financial Net Zero Alliance are going to have a big impact on us, because what's ultimately going to govern what Paul and I and our successors and our fellow signatories can do is the commitments that our own institutions have made to decarbonize our portfolios. And I think that's what speaks to the likely evolution of the Poseidon Principles, where we will eventually move to meeting those goals, which will be really measuring the amount of carbon. Now, one of the interesting things coming out of the second reporting year is some anomalies created by COVID, and I'll let Paul and Bud in particular talk about those in a minute. So it's a learning experience for all of us, but what we also benefited in the second reporting year was the latest emissions data. So we used the fourth greenhouse gas study. We improved the number of trajectories to better reflect the variety of assets that we are financing. And that also, I think, captured much more the efforts of the industry over the last few years to make shipping more efficient. And I know Arlie will talk about that. And we improved our process. So we made it easier for our clients to report the emissions. So the bureaucracy, if you like, behind the reporting was made quicker and simpler. And we also looked to make sure we captured everything that is caught by the IMO regulation. So any vessel that is financed by a signatory that gives a DCS report on May the 31st, we included all that data. So it got around some of the arguments around different types of tonnage. So if a ship owner submitted the emissions data through flag state verified by class 2, the IMO, we have included that in our data. The goal, I think, increasingly is going to be more as much transparent as we can without, of course, breaching confidentiality. And I think in the next couple of years, really coming to grips with the IMO's own regulatory changes and to what extent we should or shouldn't incorporate that in some way in the Poseidon Principles. So between now and our annual meeting in April, we will be looking to learn the lessons from this second year of reporting, to take into account, as I said, the other initiatives that our own institutions are committing to, and also to really think about the ultimate goal. When we change the ambition to 0 to 50, that is zero emissions in the portfolios that we finance in shipping. And so that becomes, when that becomes the new goal, we will think about that as we evolve. I think the last thing I'll say before I sort of hand back to you is, you mentioned the Sea Cargo Charter, which originally, when we started discussing the Poseidon Principles, the commodity and energy companies were part of our discussions, and their effort, if you like, came out of this, although their methodology is slightly different. And then I think very fundamentally important was the Poseidon Principles for Insurance, launched in December, because ships don't sail unless they're insured, banks don't finance ships unless they're insured. And so we have this collective effort, but again, as I mentioned, collaborative between those of us helping the industry, helping finance the means of global trade, and those who've invested the equity in doing it, and that must continue.
Thank you, Michael. Yes, apologies. I was trying to figure out whether the organizers or I were unmuting myself, so we had a bit of a back and forth. My apologies. Paul, I wonder whether you could dive a little bit deeper into some of the comments that Michael just made. Of course, Societe Generale was also a founding signatory to the Poseidon Principles, and you were involved in the development of the initiatives, going further back than that even. And you are now also on your second year of data collection and analyzing and reporting. What does that reporting tell you from this year?
Thank you, Johannah. The first thing I'd like to say is just pick up on one point Michael mentioned about how the Poseidon Principles will evolve and probably become more ambitious. And this definitely will be the case. But I go back to 2019 when we launched, and a lot of people were saying this is too ambitious. It will not succeed. And here we are now questioning our ambition. And it just shows you the momentum that the Poseidon Principles are having. So I think that's very, very encouraging. They're going to evolve, that's for sure. And what is also very clear is that the framework is now in place, whereby climate alignment is going to continue to be at the forefront of all the banks' credit decisions, financing decisions going forwards. So in answer to your question, looking at the results, it's very early days. I don't think we can draw too many conclusions, unfortunately, after 2 years, particularly for the reasons I'll mention in a second. But what is very encouraging is that we had most signatories had around 90% or more reporting rate in terms of the data from clients. That's high. I mean, I think signatories were worried in the first year whether we would achieve anywhere near that. We're now getting 95%, and that's got to be the standard that we're expecting going forwards, because it adds credibility to what we're trying to achieve. I think the average result this year was a 7% misalignment amongst signatories. What do we draw from that? I don't think it's a surprise that there's misalignment in the market today. That's why we launched the Poseidon Principles. After all, if we were all aligned, we wouldn't need it. So that's not a surprise. That said, I think the results did kick out some surprises. It's difficult to actually compare this year with last year, 2020 with 2019, because there's been a change in methodology, and this is going to happen. We'll probably see it more going forwards until it's perfected. So that's fairly normal, but we've seen quite a significant change of methodology, particularly on certain vessel classes. Cruise, of course, is the one which everyone's focused on and journalists have jumped upon, whereby the IMO has brought distance travelled into the equation. And of course, it's rather disappointing and awkward timing for the cruise industry for the IMO to do that during COVID, when there's been very little distance travelled and most cruise ships have been standing still. So that hasn't helped the cruise results. They've gone from being the best results in 2019 to the worst results in 2020. And I think we have to look at that. And I know for certain that certain cruise companies are wondering whether we should be looking at some form of adjustment factor for absolute emissions going forward. Because the irony, of course, here is that in a year when cruise results for Poseidon Principles and for the IMO are particularly bad, actually it's an all-time positive for the cruise industry in terms of absolute emissions emitted. So cruise has really distorted the results. It distorted our own results at SG, which you're implying there, Johannah. But we've also had container shipping. The trajectories have changed there, the methodology on the trajectories, and that's in a negative way. It makes it more difficult to achieve the alignment for vessels over 14,500 TEUs. And against that, on LNG ships, it's become a little bit less ambitious, and there's more trajectory. So you can see the point I'm making, that we are not really comparing apples with pears here, or apples with apples, and therefore it's difficult to compare to 2 years. What I can say is that the results for cargo vessels between 2019 and 2020 shows a positive move, and that vessels are more aligned in 2020 than 2019. So that's a very quick snapshot of where things are. I'd like to spend a couple of minutes looking at my takeaways of that and where this is heading, because the results, okay, they're interesting, but I think where it's all heading is far more interesting. If we look at the AER, the AER has come under some scrutiny. Some like it, the Poseidon Principle uses it, the IMO uses it, and that's what we're doing. We're aligning ourselves with the IMO, but we've got the CII coming in, the EEXI, the EEDI. It's difficult to see where the industry sits when you've got so many metrics in play. So in an ideal world, we would be looking at one, and maybe that will happen in due course. The impact of the Poseidon Principles, that is, to me, the most interesting topic. Of course, we all signed up to show our environmental stewardship, to show our accountability, to show our transparency, and I think that is something which the shipping sector needs, and that's going very well. But actually, there's one other impact of the Poseidon Principles which is particularly positive and really interesting, which is the business side of things. Environmental stewardship and business opportunity are not mutually exclusive, and there's tremendous opportunity to work with our clients here. We're having already much more strategic communication with our clients about the Poseidon Principles data, about where it's going and what can come from it. We're able to show, as a structured finance bank, our innovation in the products which we're offering, and of course Poseidon Principles is creating competitive tension, because banks who have signed the Poseidon Principles want to be part of the most aligned transactions, and that's creating a competitive tension which has to be good for our clients. Just a couple of more points. I think also here we are in Poseidon Principles, we're measuring vessel by vessel, and we're measuring our portfolio of the fleet we finance. But again, it goes beyond that. We're not trying to be prescriptive in terms of which vessels we can and we cannot finance. There's no rules. And certainly from the banks I speak to who are signatories, it's client driven, it's client orientated. We don't want to be prescriptive and purely look at only financing aligned vessels or refinancing aligned vessels, because you'll lose clients that way. And by focusing on clients who have a commitment and a strategy towards 2050, this is the way to push the Poseidon Principles and actually work together with our clients so that we're all aligned. And that is leading now across the industry to products like sustainability-linked loans, Poseidon Principle-linked loans. There's a subtle difference, whereby the margin is linked to the alignment of the vessel, or the KPI is set to the corporate level by our clients. And this is a hugely positive development driven by the principles themselves. And all the banks are trying to finance green loans. That's not easy because of the narrowness of the EU taxonomy and the climate bond initiative, but we're seeing the first deals now being done, and we're seeing retrofitted ships being financed. Again, that's what the signatories need to do to align themselves over time, given the lack of alternative fuels at the moment to drive that alignment. And finally, we're also working with institutional investors now, supporting them with loans for their investments, and supporting their quest for getting Article 8 and 9 certification for their investment. So all this is coming from the Poseidon Principles. So it just shows you the opportunity that exists out there. So all very exciting.
Thank you so much, Paul. And I'm going to put a pin in a few things that I think are worth getting back to. I think you mentioned especially sort of the regulatory developments that we should be keeping an eye on. You mentioned some of the anomalies that we've seen this year, and maybe Arlie can speak a bit more to those. And then you speak in these last few points, you speak a little bit to the sort of wider sort of landscape of capital providers, and maybe we can get back to that a little bit in later on in the discussion as well. But before we do so, I'd like to get Bud and Arlie into the conversation. Bud, I guess I can jump right off of Paul's point around this is about a relationship between a bank and its clients, and you, of course, you represent a ship owner, and in that context, or in the context of Poseidon Principles, a borrower or a client. And I wonder, on that basis, what do you make of the results, and do you think this initiative is providing the right incentives?
Thank you, Johannah, and thanks to Paul and Michael for the initial comments. I think that the results are not surprising to me, because we have a metric which may be the best thing available at the moment, but it has its limitations. And what our experience has been so far has been exactly what Paul and Michael have said, that our lenders have looked at the data they've got and the results and tried to understand them better and tried to work with us and make sure that, in fact, we have a vision for not year on year getting a particular ship, or even year on year getting a group of ships to a certain place on a curve. It's how do we actually decarbonize? Because at the end of the day, our success or failure, whether it's as a lender or whether it's as a ship owner or as a community, is not going to be measured by, hey, great, our intensity metric says we're doing better. It's going to be not per unit. It's going to be, did we actually decarbonize? And Michael alluded to change in the policy environment that we're operating in, and I think that's a very, very good point. I have seen a profound change in the ship owner community in the last 12 to 24 months, where at this point in time, I dare to say that the ship owners on the broader policy objectives are leading the governments, at least in the way they manifest themselves at IMO. If you think about it, ship owners have almost universally called for global carbon pricing and a market-based measure to apply everywhere. They have submitted, at least two major ship owners groups have submitted a specific proposal of what that could look like to IMO in detail. They have called for collectively all over the place, whether it's through the Getting to Zero Coalition, which we're a member of, whether it's through other trade associations such as ICS or Intertanko or CLIA, a wide range of them, or individual company commitments. We're talking in terms of we need to be net zero for 2050. Governments aren't there yet. They couldn't do much better than have a discussion and have some language in the report saying they'll come back and revisit it again at the IMO Marine Environment Protection Committee meeting that came right after COP26. And then on top of it, the industry saying, build the framework, please let us put money into a research and development fund to help this along, because this could be done soon and it's a good start. But governments really are just not up to delivering on those things as quickly as we would like as ship owner. That's a very different place for ship owners to be as a group. And there's always been some that have been more progressive in what they've said in public and what they've done in the cases that mean more to me, but not collectively as a group like it is right now. And so I think the opportunity is there to make a real difference if the whole community can come together. I think the Poseidon Principles has had an impact on that, because it is a good idea to have the lenders, not just for their own sustainability targets that maybe they have to meet for various reasons, but also for the collective good of our industry, our sector, to be deeply engaged and be partners with us in decarbonization. Because without financing, it can't happen. I mean, it really takes that, and it's an ecosystem that's very reliant on each other. Now, how the results get applied is important, and I think it is important that, to the extent it can be, that the metrics be aligned with metrics applied through IMO. But we haven't found the right metric yet, because this one is a tool, maybe the best one that's there right now. But as Paul kind of alluded to, I'll give you an example. I'll give you two examples actually. The cruise industry in 2020, and we are the third largest cruise operator in the world, in addition to our much larger cargo business. They found almost the perfect solution to decarbonization, which was to stop operating in 2020. That's not a business model that is very sustainable in itself, but at the same time, the performance, when measured by this metric, looks much worse, when in reality, the actual emissions profile went way down. And that's not to say this isn't workable. It's just we have to understand what we're really looking at when the results come out. Another anomaly that we've seen related to the pandemic, in addition to the cruise sector, is it has forced some rather unnatural trade patterns to occur, or operational patterns. And so, I'll give you an example in the Asia to West Coast container trade, where we already were typically a little slower on the head haul going into the West Coast of the US, and then faster on the back haul to get back to Asia. That's just the way it worked, but it wasn't a huge difference. Now, because of all the congestion and a system that's been set up for LA Long Beach, and Oakland's going to implement the same thing here, I believe they just did, the ships are now sensibly slowing down even more so they don't all pile up at the anchorage and sit there and wait for, right now, like 33 days in Long Beach. That makes no sense. The locals wanted to move those ships out of the anchorage for different reasons. I'm thrilled it happened, because I think it can be a model for how you can really, on a grand scale, on a major trade route, look at the possibility to have something that actually looks like a sensible rationalization of port calls and how that ties into just-in-time arrivals on liner schedules. So anyway, all that says, those ships are going even slower coming across right now, but that means they've got to go faster to get back in order to keep the loop functioning. So what you benefit in reduction in emissions on the way over, because of where you're operating on the power curve, may be eaten right up on the backhaul, where you're speeding to get the loop back on schedule again best you can. That's an anomaly that will sort itself out operationally over time, and inshallah, we won't be stuck with this paradigm in the West Coast of the US forever. But that's the type of thing we need to have in mind when we look at results in any given year, or for any given ship or any given group of ships. And I do think it's also very important that we look at this collectively, as I think Paul and Michael have both said, as a tool. It's not going to be terribly effective for saying this one particular ship performs here. I mean, it's good for explanation and thinking about why did that happen, but it's really best for thinking about how do you balance out, in our case, a fleet, or how do you balance out a portfolio, because the operational profile has and deployment location has a great deal to do with how the ship scores under this type of a metric. And I think it really needs to be looked at in a holistic way, and looked at in a holistic way as we find what are the real solutions going forward. So I really do think that it was a good step to establish the Poseidon Principles. I think it's a place where lenders can make a difference and also be partners in the real problem solving for actual decarbonization in the end. I think there's room to fine tune the methodology, hopefully working together collectively again to find the most useful tools, and make sure we're looking at apples and apples, because this type of metric that we're using here doesn't work very well when you compare a ship that's really in the business of carrying volume against a ship that's in the business of carrying weight. And so I think that the methodology has accounted for that fairly well, and certainly my discussion with the lenders, they understand that. But I think that's an important point to realize. It's a rough cut, but it works reasonably well for similar ship types. It's not a great tool for comparing one ship type to another ship type.
Thank you, Bud, and thank you especially for that perspective. I think it's a really useful one, and it provides a really good perspective that helps us understand what can we use this for and what can't we use it for. And I'm sure your points are well taken by Michael and Paul, who are going to be looking to how do we further evolve and how to improve the principles over time, right? So thank you so much for that, Bud. Arlie, of course, you support some of the signatories to the Poseidon Principles in doing their assessment, their calculations, some of the data collection, etc. But on top of that, you also advise many companies in the maritime ecosystem on their decarbonization journey. So based on that, I wonder whether you could give us a bit of an assessment of the progress that's been made this year, sort of on a scale of 1 to 10. How are we doing?
Sure, Johannah, thank you very much for the question. And Paul, Michael, Bud, you've really covered the key topics here. So I think maybe I could contribute by giving a little different perspective on that journey, Johannah, that you described. But I'm going to try to get to answer your question about where we're doing on the scale from 0 to 10 as well. Apropos all the comments we've heard about progress over the past 5 years, today every conversation we have with our clients includes a discussion of decarbonization. Decarbonization in the context of long-term investment strategies. We're asked about how long are we going to continue to be moving hydrocarbons in this world, and in the context of long-lived vessels is a very relevant question. And then one of the real innovations over the last several years is, hey Arlie, we're reducing our CO2 emissions. We're doing something. We're all in on this. How can we monetize the value of those savings? And I think in that regard, the development of the carbon markets in parallel with the regulatory and industry initiatives is really contributing and has the potential to contribute more to the industry's decarbonization. We've seen, broadly speaking, 3 kinds of projects that are undertaken to reduce CO2 emissions. Retrofitting, Paul mentioned that earlier. There's a lot of activity going on in that regard now. Logistics, I think, and as we heard from Bud, the industry is adapting to deliver cargo under different circumstances, but it's also looking for innovative ways to reduce the overall cost and carbon emissions profile of the delivery. And finally, there are operational considerations, hull cleaning and other factors that all play into that day-to-day role. The question that we hear is, hey, I'm saving 1,000 tons of carbon this year. How much is it worth? And there's where we can approach, the industry can approach the carbon markets. You can see some emissions reductions are worth maybe $10, others might be worth $20, depending on the flavor of those emissions. But the one key distinction that I always hear when we talk to our clients is that they're looking for short-term results. And this is a very cash-driven discussion, if I could put it that way. So they're looking to see how they can directly link the investments they're making today in terms of the incremental cash over the next 2 years, 3 years. So we're seeing action taking place now. We're seeing concrete investments being made. They have a short-term horizon. They want to see results fast. So when we take a look at the Poseidon Principles and the data that has emerged, in addition to helping our clients process, and I was very pleased to hear Michael talk about the increased efficiency of the process this year. Certainly, I think great strides were made in that regard. So we see this process being better, but now what do the data tell us about the progress that we'd hope to see, given, as I see, we see numerous investments going on. Now, I have to be careful when I take a look at the data, because I think, like many of us, I have a tendency to confirmation bias. And I see action, I like to see that it has the desired results. So that's just a warning to the panel and to the participants here that that's where I come into this discussion. But having said that, I think there is clear indication in the data that has emerged out of the second report and in comparison to the first of progress. Now, for example, when we take a look at the data, and we've had the opportunity to drill down on a fairly large subset of the Poseidon Principles fleet, if I could put it that way, in terms of individual data, vessel performance, I should emphasize, not their debt profile. We see in 6 of the 7 sectors that we track an improved alignment. Now, what do we track? Dry bulk, tankers, container ships, LNG, LPG, dry cargo. In all of those sectors, there are more ships aligned with the Poseidon Principles trajectories than there were in 2021 than there were in 2020, excuse me, 2020 versus 2019. So we see improvement. Now, I should say dry bulk's an exception to that. There are fewer ships aligned in that sector. So we see in the data that we choose to look at clear progress. I should say we don't look at the cruise ships, and so that's we've already discussed that. I think it's clearly an anomaly that really should be noted, and then they should be carved out of the discussion. Container ships, I want to talk to the point that Paul mentioned about the performance of container ships. The data that we look at tends to be of ships less than 10,000 TEU. So relatively small by the behemoths that are now on the water. And those ships appeared to, as I say, improve their alignment with the trajectories. So progress there. I wonder if those challenges around measuring, in the very early stages of the very large container ships, I wonder if that learning process that is going on at PPA is going to help us refine our understanding of how those ships are performing, or whether or not that's all just a COVID mess that we'll never figure out and shouldn't bother. I think so we see progress, we see, and certainly the level of interest in this decarbonization investments has grown tremendously. But I want to bring it just to I think the point that Paul and Bud have made most clearly. This is a rapidly changing industry, often unexpectedly so. I'm an economist, so I say what that means is the option value is really high. To someone who's in logistics, maybe they phrase it differently. Flexibility is key. And so I don't think we have to recognize the ability of the industry to be agile, to respond quickly to changes, and to successfully deliver cargo in those dramatically different market circumstances. Ultimately, that's the key. And we have to make sure that we are flexible in our approach to reducing CO2 emissions. And those are a lot of the conversations that we have. So in terms of progress, Johannah, somewhere above 5. I wouldn't say above 7 at this stage. 10 being really good, 0 being really bad, just to benchmark there. I think there is a lot of discussion about different metrics, and so we're all learning about jargon. At the end of the day, I'm kind of in Bud's camp. CO2 goes down, that's a good thing. Cargo keeps moving, that's great. So somewhere maybe almost 6.
Thank you, Arlie. That is as good as an effort as we could probably expect. That I just threw this at you right in the session. So thank you so much for trying to put a number on it. I know, Michael, you had your hand up, but I just wanted to put raise a question from some of our audience. There's some questions that have to do with the methodology and the metrics, which I think is probably premature to respond to at this stage, because some of this work is only getting underway in the months to come. But certainly there is a question which I think relates to maybe something both you and Paul brought up at an earlier stage. Both of your institutions have net zero targets, as do many other financial institutions. At COP26, we saw the establishment of the Glasgow Financial Alliance for Net Zero. How do you see this impacting ship finance in the long term? Might this impact access to capital? And more specifically, from the chat function, we see the question coming up. Will we see a meaningful difference in the cost of capital based on emissions? Michael, over to you.
I think the simple answer to the last question is yes, although it's not apparent yet, but I'm sure you will, and for the following reason. This industry is changing rapidly, and Arlie sort of touched on that. And this industry is increasingly not about the ship, although clearly supply chain issues and we've been talking about are very focused on the ship, because that's the way through the IMO regulation we've been able to measure portfolio emissions. But we are going to carbon emissions. The Net Zero Banking Alliance, Glasgow Financial Alliance for Net Zero, talk about emissions, talk about targets for 2030 and 2050, and it includes facilitation. So it's not just banks, it's the capital markets. So if we underwrite or arrange finance in the capital markets, the emissions, if you like, for the financing there will also get counted. But I think what's key, and let's go back to COP26. You were on the platform, Johannah. I was in the audience when the UK government launched the Clyde Bank Declaration, and we in the Getting to Zero launched the next wave, the Green Corridors. This is going to drive everything, because the technology for shipping and zero or close to zero emissions is quite close, unlike some of these other sectors. And that's where the investment is going to get driven. That's where the financing opportunities for Paul and me and our fellow signatories are going to be. It's going to be financing those ships. Of course, the financing structures around green corridors are going to have to be certain, long-term, bringing in fuel producers, the cargo owners. It isn't going to be speculative. It's going to be committed for long-term in order to drive those real reductions to zero in the emissions in the trade lanes. And the reason for that is shipping is no longer about the ships, as I said, it's about the cargo. Scope 3 emissions for regulators, for investors, for everyone will measure the emissions created by the activity. Ships are only used to move someone else's cargo, forgetting the cruise industry and passengers, and it's that cargo that is going to carry the emissions. And of course, the incentive, as is obvious from the Sea Cargo Charter, is that the cargo owners want to drive the emissions in their supply chains down to zero as quickly as possible. So we'll see the transition, which is about improvements in efficiency, as the technology and the fuels come into play through, I think, those green corridors, because those are going to be big projects up and running within about 5 years. Then you're going to see the reality of an industry that is financed in a very different way. Almost some sectors of shipping will become global utilities, because it'll be driven through the cargo and how the cargo owners and ultimately the consumer. And this, I think, is the key shift in the whole debate. And I often talk about Greta Thunberg and her generation, but I think it's absolutely true that the consumer is driving a lot of this behavior. That's why the COZEB Alliance, when they announced in October, announced no fossil fuel in their supply chain by 2040, which now Maersk have aligned with that too. And that is staying one step ahead of their consumers, their purchasers, their clients. And I think that's increasingly what's going to drive that. I think that's why what we can't ignore the regulatory change that the IMO is going to go through, but ultimately it is going to be the regulators of Société Générale and its shareholders, the regulators of City and our shareholders, that are going to drive what zero or net zero means. And I think that will come from the data that all our clients in all our sectors gives us or publishes, has to legally report. So it's the accounting, it is the definitions of these terms that regulators and investors all want to agree on. So I think we'll see a huge change over the next 5 years. We are ahead of that in the sense through the Poseidon Principles that we're already thinking about it. We're going to move faster than the IMO, as Bud talked about. We're going to start recognizing carbon emissions, not just intensity, so that we're actually delivering for what our own institutions have committed to our regulators and shareholders. But I think the key change is around financing is it's now the cargo, not the ship. And that's what's going to change the investability and financial credibility of this industry in the long term. And that change has already started.
Thank you, Michael. I think the key takeaway that I take from your remarks right now is that you're countering Arlie's short-termism with long-termism, which is great to hear. Paul, you wanted to add to that?
I think just going back to your question, the banks have made their own initiatives, they made their own commitments towards 2050 with a number of initiatives. Poseidon Principles is yet another initiative related to shipping, and it's not aligned with Paris. So there's going to be pressure on the Poseidon Principle to align with Paris. What we have to realize is that shipping finance is just one division in most of the banks, and that capital is finite. So each business line has to justify the provision, the use of capital, the allocation of capital with their management. And my bank, but a lot of the banks who have signed up the Poseidon Principles have their own business models, which are where ESG and 2050 net zero is absolutely central. And therefore, unless we align with these business models, that capital allocation to this business line will shrink. That's just common sense, and it's economics. So we have to align ourselves. So in terms of will shipping finance change? Yeah, it has to. We have no choice. And as long as we align ourselves with our clients and we back those clients who are committed, who do have their own strategies towards being net zero in 2050, we're all on the same path.
Thank you, Paul, and thank you for restating that. But I'll get you to you in just a second. I just want to just put a pin in the common sense for your bank is also common sense for society. So that's great to hear. Bud, over to you.
Yeah, thank you. I'd like to maybe just follow up on a couple of the comments that Michael made and what I thought was an excellent intervention. There's a lot to unpack there. A few things. One is, I think Michael's right that the technology is winning the race, and we're not far from having the technology that it takes to use truly decarbonized fuels, at least in a net sense. And we still need R&D aggressively because we've got to accelerate that part of it so that the ships are ready for the fuels. But at the end of the day, I really believe the long pole in the tent here is going to be, do you have the fuel? And do you have it at scale? And do you have it, at a price where you can afford to stay in business? And that last question gets answered by the customers. And I think Michael's right. I think with or without regulation, this is happening. It's going to happen. But I think that our customers and society as a whole has to understand this comes, at least in the short term, at a financial cost. And, this is not a small deal. I mean, reasonable estimates are 2.5 to 8 times the current price of what we pay for fuel is what it will take. That is going to have an impact. So it's one thing to say, yes, we're only going to ship on this type of ship, but it's another thing to say, as frankly one of the signatories to that said in a very public way that same week, but we don't think there should be any premium for that. Those two things don't go together. I will have to pay more money to heat my home. I will have to pay more money to drive my car in any form it takes. That's going to be the nature of things. And when we have a conversation with consumers, it's actually a pretty easy conversation. Would you pay, an extra euro or an extra 25 euro cents for a piece of clothing or a consumer good? They go, yeah, that sounds right. I'd do that. But those aren't the people that we're actually dealing with when it comes to shipping cargo. We're dealing with people that ship in a much larger block, and they have to really be part of the journey financially as well as in the rhetoric. One last point that I would like to make, because it is so important that we're in this together. We really are, and I don't think there should be finger pointing. I think there should be collaboration to get it all done. But it's also, in order to complete the journey, it's going to be really important to get to the fuel providers, the energy providers, because shipping's not big enough to drive that production at large scale itself. They're big enough to send a demand signal, and certainly we are. I don't think there's an energy provider out there that doesn't know that my company is looking for a wide range of alternative fuels and plans to use quite a few of them. I talk to them almost every day in one form or another. But we are still not going to drive the scale that it takes to have the fuels that we really need. The rest of society is a much bigger consumer, and I think we need to find the synergies where we can match up with where those fuels are going to be to reach our aspiration, which in our case is net zero for 2050 without the use of offsetting out of sector. But I also think in that last thing I said, we should make sure we're talking the same language. And right now, at times, we're not, because you hear people throw around the terms net zero, carbon neutrality, absolute zero, as if we're all saying the same thing. We're really not necessarily all saying the same thing. And for us, net zero means in the production of the fuel throughout the whole life cycle and its consumption without the use of external offsetting. But for others, it doesn't mean that. And for carbon neutrality, to some, that signals I definitely intend to use offsetting. For others, it doesn't. And for absolute, if we use that too literally, you may really only be talking about, if you're not counting the life cycle and you're only looking at the consumption, you might only really be talking about nuclear and the H2 molecule. at that point. So I think getting the nomenclature right is something that would really help, so that no matter what it is we call A, B, C, or D, we're not talking past each other, because I think we'll make a lot more progress if we're speaking the same language. And I think these terms need some clearer definitions than they have right now, because I just think we'll find ourselves able to make more progress faster.
Thank you, Bud, and I thank you for making those important points. So I think your latter point is really well taken. There is to some degree a sort of a large cohort of definitions, and so undertaking a sort of a more clear definition, I think Poseidon Principles hopefully can contribute today to that. There are other initiatives that can contribute to an alignment around definitions and understanding of what those definitions mean. And then the other most important one, which is around the collaboration. And perhaps collaboration with a new set of stakeholders that haven't been the natural partners for the shipping industry in the past. So I think that's something for us importantly to hold on to. I can see Jim is back with us. I think that means he's about to bring the session to a close. Thank you so much to the panelists from my side. Thank you for giving us the opportunity to speak. Jim, over to you.
Great. Johannah, thank you very much, and thank all of you. It was a discussion initially about the Poseidon Principles, but I really think that for the consumer, and indeed really for humanity, and Bud, thank you for using that word yesterday, it's important to appreciate how this really ambitious collaborative effort, a word we heard again and again, to measure and reduce harmful emissions is revolutionary. And as it grows in skills and detail, and it's worth reflecting that its impact already undeniable across our industry and ship finance, and continuing to be so, it is impressing other industry sectors which are and will kind of follow in the vital effort to combat climate threats. So thank you, Johannah, Michael, Paul, Bud, and Arlie for your passionate energy. To all of you participating today, you too are key protagonists in this grand experiment. And I hope you will see the collaboration with banks and principals as a benefit to the way forward, and following this webinar, reach out to each other and also join the work of the Global Maritime Forum. In our striving for a more better future, I'll close giving the last word to Kristen Holt, an architect of the principles when with DNB. She said this morning to me, "Don't let perfect be the enemy of the good," word she used earlier in the year. That we must just think big. So stay tuned. Thank you all, and stay well. And we'll see you all next month at another High Tide event. And soon we'll all be together with any luck. Stay well. Thank you all very much for your work.
Thank you, Jim. Thank you, Johannah.
Thank you. It's been a pleasure.
Thank you.
Thank you,
Thank you. Thank you, Bud.